Good afternoon, everyone, and welcome to our live webinar on the legal and tax landscape in Qatar. My name is Bianca Beck, and I am the Middle East Marketing Manager at Sovereign PPG. The session today is being recorded, and the presentation and recap will be shared with all of you participating today. And we really do encourage any questions in the Q&A or chat function, and myself and the team will help address them at the end. I'm very pleased to introduce our two speakers today. First is Mindy Tan. She is our Business Development Manager at Sovereign PPG in Qatar. And alongside her is Dr. Antonio Galib from our partners at HLB AG, an audit and tax advisory firm. The team will be covering key topics like why clients are choosing to move to Qatar and set up their businesses, how tax is applied across the Qatar jurisdictions, and some of the key setup steps for businesses as well. So let's get started. Mindy, I'll hand over to you.
Thank you, Bianca. Hello, everyone. Thank you for taking time off to join us today for the webinar. My name is Mindy, and I am the Business Development Manager for Sovereign PPG Qatar. I hope everyone can hear me, yeah? Right. So just a little background of our company. Sovereign PPG was established more than 15 years ago in Qatar, and we have since expanded to the UAE, Saudi, Bahrain, and Oman. We currently have more than 30 offices in 26 jurisdictions, offering services like business formation, trust services, wealth management, to name a few. However, in the GCC, our primary focus is still business formation, corporate structuring, and PRO services. So in the next few slides, I am going to walk you through why Qatar remains as one of the most popular countries for business expansion, which are the sectors that we view have potential growth, and of course, the jurisdictions you can set up your business in. So Bianca, can we go to the slides, please? Hi, Bianca, is the slides on? Have we shared the slides?
Yeah, it should be why Qatar.
Okay, sorry, because I'm not seeing
the
slides.
No worries.
Okay, no problem. So Qatar is one of the fastest growing economy in GCC, largely due to the strategic location is connecting the east and the west. And the country has one of the most advanced airport and ports connecting to more than 150 global destinations. So because of this makes Qatar very ideal for regional headquarters as well as international expansions. Qatar is also one of the highest GDP per capita in the world. And as we all know, Qatar's economy has always been driven by the energy and gas reserves that we have. While the energy sector remains a key pillar, the country is also actively diversifying into non-hydrocarbon industries such as technology, sports, education, tourism, and healthcare. And this is in line with the Qatar National Vision 2030. In order to attract foreign direct investments into Qatar, the Qatar Investment Authority and Invest Qatar has also introduced over the past 2 years programs and incentives aimed at supporting new businesses who are coming into Qatar. So in recent years, Qatar has also streamlined the regulatory framework to align with global standards and also to make it more investor friendly for all our clients. So this includes allowing more activities to be 100% foreign owned, and also the introduction of bankruptcy law, as well as the public-private partnership law. So in terms of taxes wise, the country offers a competitive tax environment. It's very low corporate tax rates, 0% income tax, no VAT. And if your business is set up in specific jurisdiction, you may get certain tax holidays and exemptions as well. I wouldn't go into too much on taxation because Dr. Antonio is going to share more details about taxation shortly. So last but not least, Qatar also offers a stable legal and regulatory framework that ensures transparency to boost investor confidence as well. Qatar continues to rank amongst the safest country in the world. That's why we are all here, making it a very attractive destination for long-term investment and also to stay here in Qatar. So the next slide. Some of the key growing sectors that we feel is going to be booming over the next few years are energy, construction, as well as technology. With energy-wise, with the North Field expansion project, Qatar is set to become the largest LNG producer by 2030. And this project actually creates a lot of opportunities across engineering services, equipment supply, and maintenance within the energy sector. So that being said, the government continues to encourage strategic partnership to support this local development and also diversification. So next up, construction. Following the success of FIFA World Cup, Qatar continues to invest very heavily in infrastructure projects. For example, the GCC rail, the smart cities such as Lusail, and also large-scale projects that combine residential, commercial, as well as leisure spaces. So with this growth in construction, we actually see a growing demand for sustainable building materials, facility management solutions, as well as real estate advisory services. Last but not least, of course, Qatar is going to establish itself as a regional hub for technology aligned to the National Vision 2030. So the opportunities that we see in this sector are areas like cloud computing, fintech, AI, digital transformation, to name a few. So this momentum actually positions Qatar as an exciting destination, especially for tech entrepreneurs, startups, or even investors looking to be part of the region's digital future. So it is very important to choose the right jurisdiction and structure if you are looking at setting up in Qatar. Over here on the slide, you basically see 3 different jurisdictions. So largely speaking, these 3 jurisdictions are the most popular in Qatar. So you have your mainland. Basically, to set up in mainland, you are actually under the Ministry of Commerce and Industry. You are under the Qatar laws. Most of the business activities, there are actually 2,800 business activities available for companies who are setting up in the mainland itself. And majority of these business activities, they are available for 100% foreign ownership. And if you are setting up in the mainland itself, you have the ability to actually operate on a different model. So you can be B2B, you can be B2C. Okay, there's no restrictions in international onshore businesses. So you don't have to have a specific percentage on onshore or offshore businesses. And most importantly, you can also tender in government projects and actually work with the local parties as well. So next up, Qatar Financial Centre. So Qatar Financial Centre, it was established originally to support the financial services in Qatar itself, to bring in foreign financial services into Qatar. And over the years, it has also expanded its services into professional services, like, for example, legal, accounting, as well as IT services. So the good thing is you are under an English common law, and whatever businesses that you are setting up in QFC, it can be 100% owned. However, for the businesses setting up in QFC, right, you have to work under a B2B model. So you will not be able to operate directly with consumers. The good thing is, if you meet certain criteria set by QFC, there will be certain tax exemptions this company can apply. Last but not least, for Qatar Free Zone. So Qatar Free Zone basically is established for sectors like manufacturing, trading, logistics, and most recently is opening itself up to technology as well. So we have a few software development, IT consultancy actually set up in Qatar Free Zone. So most of these businesses are 100% foreign owned, right? And if you are set up in Qatar Free Zone, you actually enjoy a 20-year tax-free window. So to find out which jurisdiction and structure you are looking for, we first have to basically identify the business activities that you are in. So that is one of the major consideration. But the other consideration that you have to also consider is taxation, which I will now pass on to Dr. Antonia to share with you more information regarding the tax environment in Qatar itself. Dr. Antonia?
Yes. Good afternoon, everyone. My name is Antonio Galib. I'm the managing partner of HLB AG. We're member of HLB International. We're number 80 globally. Our turnover is around 5.9 billion USD all over the world. We represent 156 countries. I'm the one who is managing HLB in Doha. We're available in the mainland and also under the QFC as a fully licensed entity. It is a great pleasure today to present and to show the Qatar regulatory bodies comparative. What is the difference between the QFC, QFZ, and the GTA? It's good to understand the tax framework for the three jurisdictions, because most of the people, when they come here to Doha as a new investors, they need to understand the tax. They need to do kind of tax due diligence before they go to any jurisdiction. Can you move please to the second slide? Yeah. So under the Qatar Financial Centre, let's start by the QFC. The QFC is not for contracting, is not for trading, is not for manufacturing. So QFC is mainly for, as my colleague she mentioned before, IT services, fintech business, financial institutions, insurance companies. That's the QFC platform that has been established in 2016 for the purpose of encouraging foreign investors to come to Doha, establish companies, make Qatar as a hub for the IT and business-related services. It is 100%, it allows 100% owner partnership for the expatriates, foreign partnership. There is no withholding tax, and then we will see the difference between the QFC, GTA, and Qatar Free Zone. You can repatriate the profit 100%, and there is no tax dividend under the QFC. The Qatar Free Zone is mainly for companies. They're coming here to the Free Zone to establish manufacturing facilities, factories, and they have overseas transaction. The purpose of establishing a company under the Qatar Free Zone is not to work in the mainland. If you have overseas companies abroad and you have overseas clients abroad and you want to do exportation abroad, you will consider Qatar as a gateway to be able to do all these transactions. Regardless of the revenue that you generate or the net profit that you realize, the tax will be zero for 20 years. So that's the main purpose of the Qatar Free Zone. And the regulator that gave this incentive to the new investors, they come to Doha to make Qatar as a hub, a business hub, to meet also with the Qatar Vision 2030, and to be able to enjoy the tax for 20 years. The tax also is not applicable not only on the corporate tax. There is no income tax, there is no corporate tax, there is no dividend tax, and then you can repatriate as well the dividend that you generate. You can open a bank account in Doha. Any money that you generate from abroad, you can transfer it to Doha, to any bank that you establish it here, and then you can transfer all the profit to your parent company or to any other related party or subsidiaries abroad. The GTA, everything you can do under the GTA. The GTA is under the mainland, which is the Ministry of Commerce and Industry. When you set up an entity under the Ministry of Commerce and Industry, that means it is linked directly to the GTA. QSTP is Qatar Science Technology. It's only for research and development. There is no tax there. There is nothing. And it's mainly for the research and development. You cannot do any other services there. So under the MOCI, you can establish manufacturing, you can establish factoring, you can establish trading, contracting, services, banks, financial institutions, anything you can do under the mainland. The tax is applicable 10% on the foreign partnership. Local partners, Qatari, they are exempted from paying tax, provided that they are resident in Doha. Even GCC people, if they are resident in Doha, they are also exempted from paying the 10% corporate tax on their profit share in the Article of Association. However, if they are not resident here, they will be treated the same as any foreign expatriate. This is the law, is very clear, and this is the executive regulation and other relevant circulars issued by the General Tax Authority. The only difference here between the GTA and the Qatar Financial Centre, apart from that, is the 5% withholding tax. Under the GTA, there is 5% withholding tax on any service that any company that avail the service of any foreign service provider. What does it mean? If you are a company that is based here, IT company, and you want to avail the service of one of your related parties or of any foreign service provider, even if they don't come to Doha, as long as it is destinated, the service is destinated to Doha, it is consumed in Doha, it is exploited in Doha, any payment to this foreign service provider will be subject to 5% withholding tax. And it is the responsibility of the company that is registered here to withhold the tax and to remit the tax to the GTA within 15 days following the month when the payment was occurred. If you don't withhold the tax, then you will be responsible, the resident company will be responsible, the resident company will pay the tax and will assume the penalty as well. There is no tax on dividend under the MOCI 2. Any dividend you can pay to any related party, to any partner, legal or natural person. There is no, you can repatriate the profit 100%, but there is a capital gain tax 10% on any transfer of shares. If you own a company and you need to transfer yourself the shares to any other foreign partners, you need to pay capital gain tax 10%. How they assess the value of the share, here it's up to the GTA discretion. Even if the company is losing, they value the share of the foreign partner based on the equity of the company, or if they can see that it is not logic, they have the full discretion, and it is their call to appoint a valuer to assess the value of the share and to apply the 10% capital gain tax. This is the GTA. We're talking now about the GTA, the General Tax Authority, in details. What is subject to tax under the General Tax Authorities? That means all companies that are registered under the mainland, because QFC, they have their own authority. They have their own tax authority. We don't have to link and merge between these two. So any company under the mainland, anything that the company generates in Doha, any expenses incurred, it can be deductible, and they have to pay the tax in Doha. Any foreign source income that the company that is registered in Doha and they generate from the projects abroad, we call them Qatar projects or project they executed by these companies abroad, the income and the revenue that is generated is also subject to tax, and it needs to be registered in Doha, provided that if the company that is resident here, they got the project and they establish a permanent establishment in those countries. If they establish a permanent establishment in those countries abroad and they are paying the tax there, then the project value and any expenses and revenue cannot be registered in Doha, and they are exempted from being registered here and pay the tax in Doha. However, so the critical point, whether the company that signed the agreement, it has been operating through ACR, a permanent establishment, they have paid the tax there, they have paid to the tax authority in the relevant country, yes or no. So otherwise, if they did not, that means everything should be included in the financial statement of the company here, and they have to declare it to the General Tax Authority and pay the tax accordingly. Any real estate company, if the company in Qatar own a real estate abroad, any rent generated also, it should be included in the financial here and the tax, and it should be paid here, unless the real estate is owned by another PE in the relevant country and they are paying the tax there, then there is no, then the tax, the income or the income that is realized, the net profit realized, the taxable net profit realized will be exempted from tax. The same applicable for interest that the company or technical service, if you're doing any technical service to any company abroad and you don't have a PE there, any permanent establishment, you need to declare it here and you need to pay the tax in Doha. The withholding tax, as we mentioned before, the withholding tax is 5%, is applicable on any service that the company provides to Doha. Before the new law came into force in 2018, any service that has been done abroad without coming to Doha or without doing anything in Doha, 100% offshore, it was not subject to 5%. After 2018, any income, any service, consumed or exploited or destinated to Doha, then it is subject to 5% withholding tax. So now the tax has been changed from the source to destination. It's no longer source, it is about the destination, where the service is being used. It's being used in Doha, that means it is subject to 5% withholding tax, and it is the resident company here in Doha to withhold the 5% withholding tax. That's why it's always highly recommended when you do any agreement between any service provider, you need to split between the service and between the material. Let's call them supply and apply, because the withholding tax is applicable only on the service side, is not applicable on the material side, on the supply side. So it's always highly recommended when you do any agreement with any service provider. When I say service provider, it can be related party and it can be a third party. We don't have to say that this is a related party, is not a service provider. No, service provider, anyone, related party or third party. Okay, so we need to split the agreement between each other, between the company here that is resident in Qatar and between the service provider and the company, between the company abroad, the service provider. If you don't split the agreement, because based on the law, the GTA, if they notice that and they do their inspection, they will not consider that the service part is not subject. They will impose the aggregate amount to the 5% withholding tax, and it happened with us because they consider IFRS 15, they link the tax to the IRS 15, that it depends on the performance obligation. So you cannot, so the service is not, the obligation hasn't been achieved until you supply the material. So they link these two together. So it's highly recommended to split these two and do not link them to each other at all when we do any agreement. What is not subject to the withholding tax is the reinsurance, not the insurance. The reinsurance companies like the big companies, AIG or this one, they do insurance on the insurance companies. Shipping and ticket sales is not subject. Maritime transport, oil and derivatives, those are not subject to withholding tax. Interest. Here also I can see, because Qatar is a hub for too many foreign companies, related parties, sometimes they get loan and they charge interest. If you are, we need to split between two. If you are a related party, subsidiary, that means a company, you have a WLL, and the company own shares in the company here, and they give you money to support financially the company to ensure its business sustainability and the operation of the company, and you want to pay back interest for this company. Okay, so the interest that you pay is subject to withholding tax that you want to pay. So the permanent establishment is not subject to withholding tax. Some people, they get confused between the PE and between the subsidiary, the related party. The PE is a permanent establishment. The PE is the same name of the company that is established in Doha. The subsidiary is completely different. The subsidiary is a company that is owned by another company. However, the PE is not owned by anyone. It's owned by the headquarters. Okay? So the PE, is any interest that you pay to the PE is not subject to the withholding tax. Can we move to the next, please? Yeah. For the audit and tax, who is subject to tax and who is subject to filing? Anyone in Doha, anyone, Qatari, non-Qatari, 100% owned by Qatari, or not 100% owned by Qatari, is subject to tax filing. Okay? We're talking about the GTA here. Anyone is subject to do the tax filing. Regarding the audit, any company that has a capital more than 200,000 and more, and if you have 500,000 Qatari riyal and more, and the main office is outside, you are obliged, in addition to the tax filing, to do audited account. Okay, this is a must. However, they give for the overhead burden and to avoid this significant overhead for people small and the startup entities, the MOCI, they said, if you are a small entity and your capital is 100,000, your turnover is 200,000, and your head office is here. You don't have you don't have a head office there. The management is here. The decision making is here. Okay, we need to look into the decision making. The management where is here. Then you have to file the tax, but you don't do audit. They give the option. You can do it. It's an option, but you can also avoid paying the auditor and do the audited financial statement. For the Qatari companies that are owned 100%, they gave them the option to do simple tax return without audit if the turnover is 5 million and less, or the capital is 1 million and less. This is only for the Qatari and the GCC nationals who are resident in Qatar. So always we don't have to look into the nationality. We need to look into the residency, where they are resident. Okay, this is very important for the tax purpose. We always look into where you are resident, and then we move into the second criteria. There are several criteria, and then we move into the next criteria to make sure that we are within the law, within the executive regulation, and also within the relevant circulars that have been issued by the General Tax Authority. The account should be based on IFRS. There is no local GAAP. There is only international financial reporting standard that every company should follow and should apply. Anything, and when we calculate the tax, we apply IFRS and we apply the executive regulation and the income tax law. Anything that is not deductible, we add it back to the profit, and then we pay based on the taxable net profit. So always we can see a difference between the net profit that is based on the financial statement and between the taxable net profit after we add or deduct anything that is deductible or non-deductible. For example, the provision is non-deductible. So in the financial, I have to take it because it's IFRS. Under the tax, I have to add it back to the profit because it's not taxable. This is a small example. Can we move, please? The penalty. If you can see here now, the GTA, they have postponed. I believe all of you know, or if you don't know, you still have time, 1.5 months till end of December. They are giving all the people under the GTA, if they did not file anything from 2014 till now, they don't have any objection, they don't have any appeal, they don't have any court case now with the GTA. They have the right to file from 2014 till now, and they will avoid, they will waive the whole penalties. The tax, it cannot be waived. Definitely they will waive the penalty, and the penalty is significant. If 2018 and moving forward is 180,000 per year, the cap. So they will make it zero. Let's say we have clients, after we finish for them the penalty, it reached around 800, 1,100,000 automatically, because we filed based on the new circular that has been issued by the GTA in March 2025 and is still yet applicable to December, because the end it was in August, and then they give the incentive to the taxpayer to comply with the rules and regulation, and they give them extension till end of December 2025. So if any of you didn't file yet, they have the option to file to get benefit from this new extension. Okay, so any filing you don't file, you pay 500 per day. The cap is 180,000. This is only for the filing. For the payment, if you don't pay the tax, you pay 2% per month up to the amount that it was supposed to be paid. If you have a tax, let's say amount 100,000, you pay 2% per month until you reach the tax. The penalty will be until you reach the 100,000. It cannot be rolling over permanently. Okay. The 20,000 registration is no longer applicable. Why? Because now, starting, I believe, 6 or 7 months, there is the synchronization, automatic synchronization between the MOCI and between the GTA. The moment you set up the entity under the MOCI, they automatically you get the tax card from the GTA, and then there is no need to do a further registration. Before that one, if you don't register within 60 days, then you pay the 20,000 Qatari Riyal registration. There is tax exemption for 10,000 for not submitting returns. Bookkeeping and violation of records is very important. The ERP system and accounting system, that too many startup companies, they don't want to pay for accounting or for bookkeeping. If they do inspection and they notice that you're not doing bookkeeping, you're handling on Excel, this is not proper books, then there is a fine 30,000 for that. And if you don't handle the books properly, sometimes we can see estimation by the GTA is not justifiable. So why is 30,000? Because they have requested, and then we couldn't provide proper documents, we couldn't provide proper supporting documents, and then you don't have a proper accounting system, and automatically they fine 30,000 Qatari Riyal. There are other penalties here for shell companies. We don't want to go into details here. What is shell? What are these companies? This is a bit complicated. the withholding tax is also, you will pay, if you don't withhold the tax, you will pay the tax and the amount that should have been withheld plus up to the tax. So you calculate 2% until you reach the limit, which is the 100% of the tax, the withholding tax that should be paid. And it is your responsibility as a resident to withhold the tax. So they will impose you, they will fine you. You cannot tell them that this is the foreign service provider. No, it is your responsibility because they know nothing about the foreign service provider. The foreign service provider is not registered here. It is your responsibility to comply with the tax rules and regulation. Can we move, please? Yeah. This is the transfer pricing. It's very important as well to understand. There are too many related parties. Transaction between the subsidiaries, between the parent company and its subsidiary, or between any related party, okay? That is based on the international accounting standards, the definition of the related party. Any transfer pricing, that any transaction within this related parties, it should be at arm's length. What does it mean at arm's length? That means as if you are dealing with any third party. If you don't do it in this manner, then the GTA, they will fine, or they will do the adjustment. There are too many companies, they are in the tax where it is less than 10%, or if it is more than 10%, I'm talking, and they will do to manipulate, to do kind of tax evasion, to increase, understate or overstate the revenue and expenses in order to reduce the tax. So it's based on OECD guideline that any transaction between any related party, it should be at arm's length. And in the GTA, they are very strict because in the GTA is more than the QFC. In the QFC, we don't have to do the local file and master file or to do the transfer pricing disclosure filing. However, under the GTA, if you have a turnover from 10 million up to 50 million Qatari riyal turnover or total assets, that means we need to do the transfer pricing disclosure form. It's not complicated. We need to, about the company structure, the nature of the transactions, what are the related parties, what are the transactions that hit the P&L, what are the transactions that hit the balance sheet. So we need to provide all this information. And then we need to provide also what is the method that we have used. Because how did you price? Did you price based on the CUP? We don't want to go technically now into details, or based on the TNMMM, or based on which method you have used. This is all will be requested and all should be filed along with the financial statement and tax declaration. If the turnover is to 50 million and above, or the total assets is 50 million or above, here we go into a different direction, which is the local file and master file. The local file is related to the Qatari company here. The master file is related to the parent company, okay? To the parent company. How did you price? What did you price? How you are pricing between the group? What is the benchmarking? So it's a bit complicated and it's a huge assignment. The deadline for filing this one is not within 30 April. It is in June usually. Now they have postponed it to October because they have postponed the filing of this year. But usually it is after 60 months from the filing of your regular annual return and audited financial statement under the GTA. We don't forget, before we move into the transfer pricing, I forgot one point to discuss it in the previous slides. It's about the contract declaration. It's not here. It's not mentioned. It's okay. You can move forward to the transfer pricing. It's about the contract declaration. In addition to the withholding tax, there is a contract declaration. You need to declare your contract. There are too many people we are seeing, they're missing this part. This part is very important because if you don't declare, you will pay 10,000 Qatari riyal per contract. What do you have to declare? And why I need to declare? There are too many people, they say, if I want to declare, I will pay tax. I don't want to declare. No. You need to declare only on the RIBA portal. You don't pay tax. We need to declare for the purpose of the tax inspector. They can, when they see the contract, they can assess whether this contract is subject to withholding tax, yes or no. So that's the only objective from the tax inspector perspective, okay? Not from as a taxpayer. For me, I can declare any contract with any foreign service provider, it should be declared, regardless of the amount. Foreign service provider, not resident here. Any contract with a resident company here, 200,000 and more service per year, it should be declared. any contract with a resident company here, supply and apply, 500,000 Qatari riyal should be declared. If you don't declare, you will pay the 10,000 Qatari riyal on the agreement, on each contract, on each agreement. So it's very important to understand how this should be declared. Who is subject to transfer pricing? Let's go back to the transfer pricing. If you have a company here and you have a permanent establishment here, yes. Then we move into the second criteria. Is the parent company or the head office is owning 50% or more? No. We don't stop. We don't say I don't have transfer pricing. We need to go into the second criteria. Who is the decision maker here? Who has the significant influence in the voting in the board? So we go into the article association and we check who has the voting right. There are so too many people. They have only 30% and 70% for other people, but the 30% has the voting right more than the 70%. Okay, so we need to look into two criteria here. One is the voting right, and one is the percentage in the capital. And then if everything, yes, it is eligible to transfer pricing, then if it is the turnover, as I mentioned, between 10 and 50, we go into the transfer pricing declaration. If it is more than 50 million, we go into the local and master file. If the company is a Qatari entity, has nothing to do with any, and the head office is here, there is no related parties, there is nothing to do with transfer pricing at all. Okay? QFC. So now, what we have discussed before, keep it aside. It's all related to GTA, has nothing to do with the QFC. It's a different tax authority, is a different regulator. Okay? It's not linked at all. They can work together. The company under MOCI and the company under the QFC, they can work together. But from the tax perspective or for any regulation, they are two different frameworks and regulators. So who is subject to tax? Anyone under the QFC is subject to 10% tax. Anyone, except we don't want to, but the holding, the passive companies. So any company that is holding and passive, not active. What does it mean, passive and active? Passive, they have the control only. I can control, I can guarantee my subsidiaries. I can guarantee the legal person that I own. I can give corporate guarantee. I am the guarantor, but I cannot do operation. So anything that is control only is passive. There are 5, 6 criteria. We don't want to go technically. And once you go beyond control, you go into operation. You put a strategic, you mention it, you go to the board, you do management, you do blah. So that means here you are operating, you are into the operation, then you will be automatically move into active company, and then you will pay the tax. And then you will do the audit. Because the holding companies, they are not required to do the audit, they are only required to do the tax if they are passive. Okay, we need to look into this passive, into a control only. I'm controlling the other company. For the active company is completely different. Okay, any SPV, special purpose vehicle or special purpose company. Also the same, there are criteria. If they are passive, they don't have to pay. If they are active, other companies, LLC companies, service IT, any companies, they are subject to tax. Having said that, we need to mention about the companies they have been established into the Web Summit 2024-2025. Those companies, they have a special exemption from the QFC. They don't pay tax, but they have to file. Even if we need to differentiate between paying tax and between filing the tax. Anyone has to file, but not anyone has to pay. Yes, if you have a special exemption from the QFC, you don't pay, but you have to file. So companies under the QFC that have been established in the Web Summit, they don't pay the tax for 4 years. The one that has been established in 2024, they don't pay tax for 5 years. The one in 2025 in 4 years. But the tax authority now, they are very clever. For any company under the QFC that have been established under the Web Summit, they need to show the QFC, and even as auditor, I need to ask these questions. What is your business plan? What is your business scalability? What did you do? What are you going to do? You cannot open a company and be idle. If you are idle and dormant, you will lose this tax incentive. And the QFC, they have already arranged a webinar, I believe in May 2025. They have informed the subject, they have informed all the taxpayers this subject matter. Okay? to make sure that the people, they understand that you're set up a company here, you need to work, you need to do business here, you need to show the business plan, you need to show us that you are recruiting employees. You cannot open a company and just open a company. So the tax is 10%. There is no withholding tax, 0. You can transfer the dividend, you can pay or repatriate all your profit abroad. What else in the capital gain tax here? If you are qualifying shareholder, we can move. If we will discuss in the next slide. So here there is a rule 1A. Yeah, I need to discuss about this rule. The rule 1A is very important. There are too many companies, when they establish the companies, they don't do the proper due tax diligence. So they consider they set up the entities and they will do the whole job abroad and they are exempted from paying tax. No. We need to look into the rule 1A, article 10(1)A of the QFC tax regulation. It's very clear. There are 4 criteria that you need to meet to be able to exempt any revenue that you generate abroad. Okay? If you have auditor, which is easy, you can appoint auditor. If you have 3 full employees during the year, you should have 3 full employees in the company under the sponsorship of the company in Qatar, then you will be able to exempt, you will be able to meet the second or the third criteria, C. The B, that's the rule, the 30%, 70%. How you are doing the job. If you have a project abroad, from where you're doing the job. If you are traveling abroad and you're doing the job abroad there, more than 70%, 80%, then no, it is subject to tax. If you are doing 30% of the job here in Doha, the people from Doha doing the job for this project abroad, and you can prove that through Mitrash, through in and out, that you are working here for a project abroad, and it can be done remotely because it's IT, it's service, it's fintech, it's blah, blah, it's whatever. Then if you prove that you are doing this more than 30%, then yes, any income that is generated abroad with the relevant expenses is not subject to tax. It can be exempted. There is a calculation for that we need to do and we need to prove, and accordingly it will be exempted. There are too many people, they have revenue abroad, but they are not doing the job here. They don't have 2 employees. They don't have 3 full employees. They have only 1 employee. It is taxable. They have 2 employees, taxable. They have 3 employees and they recruited the 3rd employees in December. It is taxable. So we want to make sure that they have 3 employees in the full year. Can we move forward, please? This is the capital gain tax. It's a bit here. If you are qualifying shareholding under the QFC, that means that if you are qualifying shareholder, you don't pay the 10% capital gain tax. Is different from the GTA. The GTA, you need to pay it if you are selling from foreign to foreign partners here. If you are qualifying shareholder, you don't pay the 10% tax, provided that you should own in the investee 10%. You should at least owning this 10% for more than 6 months. Why? Because they want to make sure you are not doing trading, okay? Speculative. You're not doing trading with these companies. Trading, it means buying and for the purpose of buying and selling shares. So if you prove this 3, then you will be considered as qualifying shareholding, and then you don't pay the capital gain tax, which is 10%. Oof. Can you move, please? Yeah. The late tax penalty is a bit different from the GTA. Here is not tough. If you don't file within 60 days, you will pay 3,000. More than 60 days, you will pay 6,000. This is only for the late filing, okay? And for the repeated late filing for 3 years, you will pay 5,000 to 10,000, okay? Filing 12 months late, additional tax related if you need to pay the 10,000 or 10% of the unpaid tax, or 20,000 or 20%, which one is higher, of the unpaid tax. If you file, more than 18 months, you keep on not filing, okay? Incorrect return of fraud negligence, here it's up to their discretion. They need to go, they need to check why this has happened, and up to the full amount of tax understated. If you do any revenue, you understate your revenue, or you overstate your expenses. It's not only you understate your revenue, you overstate your expenses, and they notice that, That means that you need to pay the full amount of tax that has been caused by this overstated or understated. Reasonable of excuse, if you have any justification, if you can write a waiving letter that justify the subject matter, that they may, it's up to their discretion here to accept or not accept. This is the financial sanctions. We've discussed about them. The due date is sanctions are due 30 days from the date of notice. If you want to apply for waiving, be careful. So if you did not file, then you have 30 days to file the letter. Within 30 days, you need to file the waiving letter. If you don't file within waiving late, you lose the time, the grace period, and then you cannot get they have the full right to reject it. And usually it happens. Always they reject if you don't meet the timing. The timing is very important always with the tax authorities. The maximum sanctions here is for the late filing is 20,000 or 20% or 20% of the unpaid tax. Which one is higher? You need to write a notice to the appeal if you want to appeal within the time frame. Can you move, please? I will leave here to my colleague, Mindy.
Yeah. Thank you, Antonio. That was really, really informative. So it is really important to understand taxes, business objectives, choosing the right jurisdiction, ownership structure before setting up a business in Qatar, or even if you have a company already in Qatar, it is always good to understand a little bit more about taxation, because when I looked at the fines, okay, it is actually quite a huge amount of money, and we definitely do not want to be on the blacklist of GTA for sure. Okay, so let me talk a little bit about incorporation in Qatar. So if you're a new business and you're thinking of finding out how to incorporate in Qatar, so I will definitely urge you to reach out to us for a free consultation. So basically, we will help you identify which is the best jurisdiction and the business structure for the businesses that you want to conduct in Qatar. So once we are happy with the suggestion, the next thing is to collect all the key documents from you guys. So basically, to set up a company in Qatar, you can either be an individual shareholder or you can be a corporate body. So we will advise you what are the documents that are required to be submitted to the different jurisdiction and what needs to be attested, legalized. So after that, there are basically three main licenses that you will be getting in Qatar itself. The first license is basically the commercial registration. And for commercial registration, it is to register your trade name along with the shareholders and also the business activities that you want to conduct in Qatar itself. Once you achieve the commercial registration, the next step is to go into the trade license. However, for you to get your trade license, there are two main criteria that you have to fulfill. So the first one is to basically have a business address. So any businesses that are setting up in Qatar will have to have a business address. So this business address can be co-working space, factory, showroom, warehouse, depending on the business activities that you are going to do. And the next most important thing is to appoint a general manager. So earlier on, I mentioned that there are three jurisdictions, mainland, QFC, as well as Qatar Free Zone. So in mainland itself, while you are appointing a general manager, it's very important to remember that the general manager has to be a Qatar resident. Yeah, if you do not have anyone who is a Qatar resident during the setup process, Sovereign PPG is able to act on behalf of your company to sign all the documents required during the incorporation stage. However, this is not required under QFC and QFZ, because under QFC and QFZ, a general manager can be someone who holds a passport. Yeah. So once you fulfill these two criteria, trade license will be issued to you. And once you get your trade license, the last step is the computer card which is also the establishment card. The purpose of computer card is basically to apply for labor quota in order for you to hire your employees or even for yourself to get a residency in Qatar. So once this stage is completed, once you get your computer card, once you get your labor quota, we will proceed to assist your your employees to apply for their visas as well as their Qatar ID in Qatar itself. So I strongly urge you to reach out to us for a free consultation today if you are interested in setting up your business, or if you have any tax related questions. Of course, reach out to Dr. Antonio because he is a wealth of experience. So back to you, Bianca.
Thank you guys, both very informative. We've only got a couple of questions, but feel free to send some more through. Masanisa was asking if we'll share the video and the presentation. Yes, we will. So Hybe was asking if I have a company set up under QFZ and I hire a remote freelancer from another country and they perform their work in their own country digitally, is there tax that I need to pay here?
Let me check where it is. I have a
It's
company
in the chat.
set
Yeah, in the chat
in the
section.
chat. Yeah, I have a company set under the QFZ. Let's say I hire a remote freelancer from another, under any company under the QFZ, there is no withholding tax that I mentioned. Any company under the QFC also, there is no withholding tax. If this company is under the mainland, yes, they have to pay. But here, a company under the QFZ, there is no withholding tax. They perform their work from there. Is there any tax I need to pay here? No, nothing. You are under the QFZ, Qatar Free Zone.
Okay, and then Natalie's asking there, do you deduct withholding tax on management fees to non-resident parent companies?
If the parent company is doing management fee for the company here, yes, they have to pay the withholding tax when they pay the amount. And if they don't pay it, maybe we must, if they don't pay the withholding tax for any of the related party parent company, they cannot accrue it for more than 12 months. Okay, so they want to make sure that any management fee, any service that is provided by the parent company, by the subsidiary, by the related party to their companies in Doha, to withhold the 5% tax when they pay the amount. And if they don't pay the amount, they cannot accrue it more than 12 months. That's very important point as well to take into consideration.
Can we explain, Mahmoud is just asking there, can we explain any the types of services
Natalie,
under withholding?
Natalie Hill, I believe we finished.
Yeah.
Masinisa, we can send, no problem. Thanks. Please explain the type of service under withholding tax. Any type of withholding tax, any type of service is subject to withholding tax. Technical services, royalties, any service. As I mentioned before, it should be service. Royalties, technical, scientific, any service, training service you do, any service you do, destinated to Qatar, consumed in Qatar, exploited in Qatar, used in Qatar, it is subject to 5% withholding tax, except what we have mentioned, reinsurance, the maritime services, ticket sales, that's only one exempted. Apart from that, everything is subject to withholding tax. I'm talking about the GTA, because here he mentioned the GTA. QFC not subject, QFZ not subject. There is no withholding tax there. Okay? Omar Arutrut, when should I pay the withholding tax and how much time do I need? Yes, that's a good question. You should pay the withholding tax when you pay your service provider within 60 days, 16, following the month when the payment was occurred. If you pay today, today we are 22nd of October, right? So you have to pay the 5% to the General Tax Authority before the 16th of November, okay? And if you don't pay before the 16th of November, you pay the 17th, you will pay the tax plus 2% penalty, okay? So you want to make sure that you always file within 16 days from the payment following the month of when the payment was occurred. If you pay the 1st of October, you should file within 16th of November to the GTA and pay the tax to the GTA. Any other question?
I think that's it from here. I'll pop both Mindy and Dr. Antonio's email addresses in the chat section so you guys can reach out to them directly. Oh, sorry, one more. Rajesh has just got a question coming through about starting a company in July 2024, but we haven't done any transactions. I'm not sure if there's a second part to that question. Does it have to do with having to register file, Rajesh? Maybe Mindy and Dr. Antonio can address that afterwards.
Rajesh Kumar, we started the company in July, but we didn't done any transactions, so we are eligible to pay the tax. What do you mean you are eligible to pay the tax if you did not do any transaction? You mean you're eligible to do the filing? Yes.
I think it was a question.
If you're eligible to do the filing, yes, you are eligible to do the filing. But if you can be more accurate here, is it you're under the GTA or under the QFC? By anything, even if you are under the Qatar free zone or under the QSTP, you have to do the filing. Yes. For the tax, you did not do any transaction. That means there is nothing to pay, right?
I think in view of time, maybe what we can do is if there's any questions, why don't we provide our email addresses, then they can email us directly to Dr. Antonio and myself, and then we can advise in details. What do you think?
Yeah, absolutely. I'll put both of your emails in the chat function, like I said. So yeah, thank you for everybody for attending. Thank you both Mindy and Dr. Antonio for presenting. Yeah, we hope you all found it very informative, and we hope to bring you more sessions on Qatar very soon. Thank you. Have a great day.
Thank you, everyone.
Bye-bye.
Thank you, Bianca. Thank you.
Bye-bye.
Bye.